good afternoon. I'm on my way to study with my friends in Time Coffee. And okay, you can see my friends here. I'm in the Time Coffee to learn with my friend. And here's my team. Hi, good afternoon, everyone. Today my team will discuss about 4 financial statement, and I will show you about the balance sheet.
Hello, I'm Hima, and today I will responsible for explain about cash flow.
Hello, my name is Uyên, and I will talk about financial statement footnotes.
Hello, my name is Lam. I'm going to talk about something called the income statement.
And we will record this discussion. I hope you can enjoy our video. Okay, and today I will explain to you about the balance sheet. And the balance sheet is divided into 2 main sections: the asset section and the liability and the equity section. To give you more detail about the asset section, the asset section is comprised of short-term assets and long-term assets. The short-term assets main contents are cash, account, receivable, inventory, repay expenses, and the short-term assets are usually listed on the balance sheet according to their degree of liquidity. About the long-term assets, they can find the main contents are planes, equipment, furniture, and so on. Any question?
Hold on. What's the difference between short-term assets and long-term assets?
Okay, the difference between the short-term assets and long-term assets is the short-term assets, they are usually on the balance sheet for 1 year or less, but the long-term assets, they stay on the balance sheet for few years.
So can you give me some example of balance sheet?
Okay, so today I have an example of the balance sheet. You can see in this here. This is one of the example about the balance sheet. You can see you must know that the total assets and the total liabilities and equities must be equal. Yes, and you can see that the account payable and the capital stock appear in the liabilities, and the assets, they can also call the current assets as short-term assets. Yeah, so this is an example of the balance sheet. Okay.
Okay, so the final financial statement that you will need to learn is cash flow statement. First, the statement of cash flow is vitally important as many small business follows, not because the profitability is, but because the state of cash flow shows company inflow and outflow of cash over in specified period of time. Next, the cash flow statement is broken into cash flow from operating activities, cash flow from investing activity, and cash flow from financing activity. Finally, for cash flow from financing activities, you will include things like the sale or purchase of stock or a distribution of dividend. And this gives you your net increase in cash, and that to the cash you have at the beginning of the period, and you will know how much cash you have on hand right now.
Okay, I'm going to talk about something called the income statement. is one of four major financial statements and is always found in a public firms. Now when we think about the income statement, we can think about a kind of the financial statement and what company have to file it. It might be better to start with a more conceptual understanding of what is released. So this is the definition of the income statement, or summary of the results of a company's operation over a particular period of time. Okay, here is the basic income statement I have prepared for you. This one is the name of the companies, the time from the beginning, and it ended this day. The income statement includes revenue, expense, and net income. The revenue, in terms of the revenue, it can be more than two. There are many different types of expense. For example, in this income statement, we have cost of goods sales, selling general, and administrative expense, and interest expense, and the last one is net income. The final number, which we are going to call net income. We can calculate the net income. We take 100 and then plus 3, then we subtract out all this expense, then we have net income.
Any question? Okay, I have a question for you. How you know about the company after you read the income statement?
After you read the income statement, you can know that what happened to the income of the company, and you can know the company loss or profit and profit.
Finally, I will talk about footnote on financial statement. A footnote financial statement provide additional information that help analyze, understand how a company arrived at its numbers. It helps to explain trends from one year to next year, and also give details the company accounting policy. So you can see this is basics of footnote financial statement comprise. So the first is accounting policies, net acquisition, and the diverse detail. More detail on an important line item. The company financial statement important one includes detailed financial statement, detail on financial liabilities, property, plant and equipment, intangible, commitment and contingencies, stock-based and compensation plan, pension and post-retirement liability, taxes, operating assessment information, stockholder equity, and finally is subsequent event. Okay, so this example of financials, footnote of financial statement, you can see they have a sitting policy of accounting. This is number 1 to number 16. Okay, so next is a balance sheet, and next is income statement, and the last is another information. So this is the end of footnote of financial statement.
Okay, I have a question for you that when I read the footnote on financial statement, I can know the number on the balance sheet, or in the you can explain for the number in the balance sheet and on the income statement, right?
Yes, because footnote of financial statement it have both balance sheet and income statement in each VM.
Okay, I got it.
Okay, sort of for today, and we have an effective learning about financial system. Goodbye.